So I think people get confused with what crypto is a hedge against. It's not a hedge against US dollars because US dollar is the denominator of which most Bitcoin activity changes. Yes, you can trade ETH Bitcoin, but generally speaking, we quote a price and it's in US dollars. So if the dollar goes up, then the price of Bitcoin goes down. It's a very simple relationship. Ceteris paribus, all things remaining equal. It also has been a crappy hedge against inflation because inflation, what we've got now is supply driven inflation, and it is really not what Bitcoin does.
This year has been a major paradigm in many ways. In addition to several geopolitical, economic, and social issues, investors worldwide have also had to battle a lot of confusion and uncertainty in the financial markets. But one major awakening is Bitcoin's performance in the high inflation environment. Before 2022, one widely held opinion among Bitcoin investors was that the leading crypto asset is a hedge against inflation. A basic definition of this concept will suggest that Bitcoin prices should increase as inflation climbs. However, the opposite has opened all year, and so far, the leading crypto asset has lost over 70% of its November all-time high. But the fact that inflation has been low does not mean it is not a great hedge against currency debasement, which is essentially what inflation does. According to several market experts, that is just a basic definition of this important concept and is just one way of looking at Bitcoin's many strengths. In August, Stephen Lumpke, the managing director of private consumers at Swan Bitcoin, said Bitcoin performs well as an inflation hedge when inflation is caused by monetary expansion. Lumpke added that supply chain issues and the food and energy crisis are the leading causes of this year's inflation. He also pointed out that unlike equities or real estate, Bitcoin doesn't need maintenance, nor is it impacted by the risk involved in stock picking. Several other market experts have also explained that Bitcoin's role as a hedge against inflation might not be really noticeable now, but it would be several years down the line when key fiat currencies decline further. Real Vision CEO and macro guru Raoul Pal recently weighed in on this important issue, global liquidity, and the transition from Web 2 to Web 3. Please watch the video to the end, hit the like button, and subscribe to the channel as we bring you this must-watch video from one of the industry's most prominent personalities. Also, be sure you turn on post notifications and check out our other crypto-related videos. Thanks and enjoy the video.
What Bitcoin does is debasement of currency. Same with gold. People got very confused with gold and it's done terribly. The great 1970s inflation, it came back and we're supposed to see gold go to the moon. It's the debasement of currency where gold goes to the moon. And for that, you need to see M2 growth, you need to see liquidity, you need to see central bank balance sheets rising. We're just not seeing that. We're seeing the opposite. So it's bad. It's a bad environment. And dollar strength generally is a sign of liquidity leaving the system. What I've looked at is global M2. China's M2 is picking up. The UK has started essentially having to increase liquidity to buy UK government bonds. So we're starting to see the potential turn, but the US is still firmly negative. And until the US cycle turns a bit, we're going to see some stabilization in this monetary cycle, but the probabilistic outcome is we have to live in the next 6 to 12 months forward because that's where crypto lives, and crypto bottomed in June. And so what it's saying is the rate of change of liquidity is now somewhat improving. It's still negative. So I think crypto gave us the signal that things are changing at the margin, but it's too soon for it to fully drive prices. So I think I was just with an interview with Mark Yusko. He put it really nicely. He goes, crypto winter finished in June 14th and crypto spring started. And spring is muddy, some days cold, some days sunny, some days wet, some days windy. But what follows spring is summer. And we're still in spring. So the market goes up and down, doesn't really do a lot, doesn't feel good for anybody, neither bulls nor bears. And that is the function of the economic cycle starting to turn.
What are the fundamental reasons why you think, Raoul, the masses would adopt crypto Web 3 versus centralized Web 2?
It's about, that's a very big question. It's really about how we live our lives on the internet. It's really a broader question about who owns the information. It's who owns identity. These are the big questions. This is what 6529 is talking about, the open metaverse. Who owns this new digital world where we live in digital communities and digital societies? What ownership of goods? And yes, We can talk about ownership of an NFT, as I've got on my token frame behind me, but really it's bigger than that. It's how do we transfer value and maintain identity in this new world? We were already seeing the rise of AI, and AI is terrifying in deep fakes. It's terrifying in what it can do and who it can be online. How do we know who's real and who's not? Well, identity is an urgent solve. It's an urgent solve because we're getting abused by the larger platforms, because they use our identity, package it up and sell it to advertisers. Why should that be the case? Why should we not participate in that economy? That's coming. I know all of the big Web2 platforms. I know them well. They all understand this. They know where it's going. It's just a matter of how do they transition away from advertising as is. But sharing it with the community, I think, is an important and powerful role. So in a digital world, everything digitized goes to zero in value because you can make infinite amounts of everything, including content, something we talk about at Real Vision a lot. Anything that gets digitized. So what you have to do is create scarcity. So in content world, you have subscription models. But what becomes more powerful is when you can put things on the chain. And by putting a JPEG on a chain, you've created scarcity out of nothing, out of something that could be infinite. And digital scarcity therefore allows value to occur, because almost nothing in the world that is infinite has value. So by creating scarcity, that's the big unlock here. So scarcity and identity in this new digital world allows a massive change in global business models, including community Web3 driven stuff, but also how we operate in the metaverse and the digital world going forwards.
Bitcoin is about to become even more appreciated and popular as a new retracted PayPal user agreement is any indication. The Payment Services Corporation has added a new update to its user agreement, stating that people who post or publish hate speech or misinformation may have liquidated damages of $2,500 removed from their PayPal accounts per violation. According to the update, which attracted a lot of attention on social media, prohibited acts include sending, posting, or publication of any messages, content, or materials that promote misinformation or present a risk to user safety or well-being, and the promotion of hate, violence, racial, or other forms of intolerance that are discriminatory. Before the retraction, PayPal users would have gotten their accounts directly debited without any prior warnings if the payment giant deemed it fit. Though many social media users have pointed out how ridiculous the policy is, others also noted that it was not against any laws. PayPal is the first to announce such a policy, but the payment giant will definitely not be the last. This is a direct attack on financial freedom, and only crypto stops this. What do you think about Raoul Pal's interview and PayPal's new user agreement policy? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and check out our other crypto-related videos. Thanks for watching.